What is up, Bitcoin Bulletin fam? Get ready for a rapid-fire update that's going to blow your socks off. The market is moving at lightning speed, and if you're not plugged in, you're missing out. We've got seismic shifts, investor moves, and tech breakthroughs that are redefining the game. You need to hear this. First up is Bitcoin cementing its status as the ultimate digital gold. We're diving deep into how institutions are increasingly choosing Bitcoin over traditional assets like real estate, and what the regulatory landscape means for this massive trend. This isn't just speculation, it's a fundamental shift happening right now. Then, we're dissecting a major legal development that could impact how crypto companies operate. A significant lawsuit has been withdrawn, shedding crucial light on the often complex world of crypto accounting and the transparency expected from major players. What does this mean for the future of corporate crypto holdings? Stick around. Next, we're turning the spotlight onto a presale that's absolutely exploding. We're talking about massive fundraising numbers, a surge in token sales, and significant interest from major investors. Could this be the next big thing everyone's talking about? You won't want to miss the details on this one. And finally, we're tracking major institutional movements on the blockchain itself. A huge transfer of Bitcoin from a major exchange is sending ripples through the market, and we're breaking down exactly what these on-chain signals could tell us about where the big players are moving and why. This is your essential briefing, so buckle up. Don't forget to smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. Let's go. Institutional shift. Bitcoin surpasses real estate. Is Bitcoin quietly outmaneuvering traditional assets like real estate in the eyes of major financial players? This is a critical question as we witness a significant institutional shift, with growing evidence suggesting a preference for Bitcoin as a robust store of value. This trend is not just a fleeting moment. It's underpinned by evolving regulatory tailwinds that are making digital assets more accessible and appealing to large-scale investors. The narrative of Bitcoin as digital gold is gaining serious traction, moving beyond speculative circles into the core strategies of major financial institutions. We're seeing a clear move from physical to digital, from bricks and mortar to blockchain, as the preferred vehicle for wealth preservation and growth. The underlying mechanisms driving this change are multifaceted. Firstly, the increasing clarity and, in some cases, supportiveness of regulatory frameworks in various jurisdictions are playing a crucial role. As governments and financial bodies establish clearer guidelines for digital assets, institutional investors gain the confidence needed to allocate significant capital. This regulatory evolution is key to unlocking the next wave of adoption, transforming Bitcoin from a niche asset into a mainstream financial instrument. Coupled with this is the inherent technological advantage of Bitcoin, its decentralized nature, limited supply, and growing network effects. These attributes, often touted by proponents, are now being recognized by institutions looking for assets that can hedge against inflation and currency devaluation, offering a compelling alternative to traditional inflation hedges like real estate, which can be illiquid and subject to physical market constraints. Furthermore, the increasing availability of institutional-grade infrastructure, such as regulated custodians and derivatives markets, has lowered the barriers to entry. Major financial institutions are no longer limited to indirect exposure through futures contracts. They can now hold and manage Bitcoin directly through secure and compliant channels. This has led to a substantial increase in corporate treasuries allocating portions of their balance sheets to Bitcoin, a trend that was pioneered by companies like Strategy Inc. The ease with which Bitcoin can be transferred and stored globally, compared to the logistical complexities of managing physical real estate portfolios, also adds to its appeal. This transition signifies a fundamental reevaluation of what constitutes a reliable store of value in the 21st century, with Bitcoin increasingly positioned at the forefront. The implications for the broader financial ecosystem are profound, suggesting a potential recalibration of investment portfolios and a lasting impact on asset allocation strategies worldwide. The market is buzzing with discussions about whether this institutional embrace marks a permanent shift. Analysts point to the growing correlation between Bitcoin's price movements and institutional inflows, indicating that smart money is actively positioning itself for this new era of digital asset dominance. The consensus is building. Bitcoin is no longer just a speculative play, it's a strategic asset class. But is this institutional confidence mirrored in the legal arena? We'll explore a major lawsuit withdrawal next that could redefine crypto accounting standards. Lawsuit dismissed, crypto accounting in the spotlight. A significant legal battle involving Strategy Inc. and its high-profile chairman, Michael Saylor, has concluded with investors voluntarily dismissing their class action lawsuit. The case, which centered on allegations of inadequate disclosure regarding the financial risks associated with the company's substantial Bitcoin holdings, has now been dismissed with prejudice. This outcome is particularly noteworthy given the backdrop of evolving accounting standards for digital assets, specifically ASU 2020-308, which mandates the mark-to-market reporting of crypto assets directly in earnings. The plaintiff's decision to withdraw their claims brings a crucial chapter to a close, but it also amplifies the ongoing conversation about transparency and risk disclosure in the corporate cryptocurrency space. At the heart of the legal dispute was the claim that Strategy Inc. had failed to fully apprise shareholders of the potential financial ramifications stemming from the adoption of ASU 2020-308. This accounting update requires companies holding digital assets like Bitcoin to recognize unrealized gains and losses in their income statements, a departure from previous practices that often allowed for more opaque reporting. The plaintiffs argued that this failure to adequately disclose the impact of these changes, particularly concerning the volatility inherent in Bitcoin, constituted a violation of federal securities laws. Strategy Inc., as the largest corporate holder of Bitcoin with over 632,000 BTC valued at tens of billions of dollars, has placed its treasury strategy squarely at the center of this evolving regulatory and legal landscape. Michael Saylor has been a vocal advocate for Bitcoin as a hedge against inflation, and the company's aggressive acquisition strategy has been a key focus for investors. The voluntary dismissal by the lead plaintiffs, including Anas Hamza, means that these specific claims cannot be refiled. The court's decision to dismiss the case with prejudice reinforces the finality of this particular legal action, while the lawsuit's dismissal is a reprieve for Strategy Inc. It does not erase the underlying challenges that corporations face when integrating volatile digital assets into their financial reporting. Industry observers and legal experts have pointed out that such cases highlight the critical need for clear, consistent, and comprehensive risk disclosures. As more companies adopt similar treasury strategies, the scrutiny over their reporting practices is expected to intensify, particularly in markets prone to significant price swings. This development has broader implications for the entire cryptocurrency industry. It underscores the complexities of crypto accounting and the ongoing efforts to establish standardized reporting practices. While Strategy Inc. has continued to expand its Bitcoin holdings, navigating this intricate legal and accounting terrain, the case serves as a stark reminder of the regulatory oversight and investor expectations that accompany significant digital asset exposure. The dismissal, however, may be interpreted by some as a positive signal for other corporate Bitcoin holders, potentially indicating that existing disclosure practices, when followed diligently, can withstand legal challenges under current frameworks. Nevertheless, the debate surrounding corporate transparency in the crypto realm remains active, and future regulatory guidance could further shape reporting requirements. The market's reaction was relatively muted, with Strategy's stock performance largely tracking broader market trends. However, the underlying sentiment among investors and analysts remains focused on the company's ongoing Bitcoin strategy and its ability to manage associated risks effectively. This case, despite its dismissal, has undeniably contributed to the ongoing dialogue about the financial and legal responsibilities of companies heavily invested in digital assets. While one legal battle concludes, another kind of surge is captivating the crypto world. We're diving into a presale that's making massive waves next. Presale frenzy, BlockDAG's meteoric rise amidst market giants. The cryptocurrency presale arena is witnessing a significant disruptor, with BlockDAG, BDAG, capturing headlines for its astounding fundraising success, amassing over $387 million and selling more than 25.5 billion tokens. As of its latest batch, the token is priced at 3 cents, offering early investors who entered at the initial 0.001 price point a staggering 2,900% return on investment. BlockDAG is carving out a unique niche as a hybrid DAG, directed acyclic graph, and proof-of-work blockchain, boasting full EVM compatibility, which is a major draw for developers seeking to build on its platform. The project's ecosystem is rapidly expanding, evidenced by the over 3 million users mining BDAG through its X1 mobile app and a rapidly growing holder base exceeding 200,000. What truly sets BlockDAG apart in a crowded presale market is its exceptional fundraising velocity and the caliber of its investor base. Recent reports indicate significant backing from institutional players and whales, with several large wallets making substantial investments, including 2 that have reportedly acquired $4.4 million and $4.3 million worth of BDAG. This strong institutional interest signals a high degree of confidence in BlockDAG's underlying technology and its long-term market potential. Adding to the urgency and appeal of its presale, BlockDAG is offering an impressive 20.49% bonus for tokens purchased before October 1, 2025, driving a sense of FOMO, fear of missing out, among potential investors. The project's strategic market presence is also a key factor in its growing momentum. BlockDAG is slated to be a platinum partner at the upcoming Token 2049 Singapore event, a high-profile industry conference. Its planned presence includes a custom booth, extensive venue branding, and live demonstrations of its technology. This significant visibility is expected to amplify its reach among key industry stakeholders, including investors, developers, and potential partners, further solidifying its position as a project to watch. Complementing its marketing efforts, BlockDAG is committed to transparency through its BlockDAG Explorer, which provides real-time data on transactions, mining operations, and developer contributions, fostering trust and engagement within its community. In comparison to other presale projects, BlockDAG appears to be outperforming significantly. Bitcoin Hyper, a Layer 2 solution for Bitcoin aiming to enhance transaction speed and smart contract capabilities, has raised approximately $13 million in its presale. While it addresses critical aspects of the Bitcoin network, it has not garnered the same level of broad investor enthusiasm or institutional backing as BlockDAG. Similarly, Layer Brett, BRETT, a meme-focused project on an Ethereum Layer 2 solution, has attracted attention primarily through its staking rewards and accessible entry price, but its presale scale and institutional investment lag considerably behind BlockDAG. Maxi, another project heavily reliant on meme culture and high staking yields, up to 600% APY, has cultivated a dedicated community but operates on a much smaller scale, with its success hinging more on viral trends than on fundamental adoption metrics. BlockDAG's combination of robust fundraising, strong developer adoption via the X1 app, and high-profile industry engagement positions it as a formidable contender in the cryptocurrency space. With its presale price set to climb to 5 cents at launch, the project presents a compelling investment opportunity for those looking to capitalize on early-stage growth. The substantial presale bonus and the clear roadmap for development and adoption suggest that BlockDAG could indeed be a significant performer in the coming year. Now, let's shift gears to on-chain analysis. A massive Bitcoin transfer from a major exchange is signaling something big. We'll decode what it means next. Coinbase transfer, 2,300 BTC signals market insight. In the dynamic world of cryptocurrency, on-chain data often provides critical insights into the movements of large players, and a recent transfer of approximately 2,300 Bitcoin from Coinbase has sparked considerable interest and analysis within the market. This significant movement of funds from one of the world's largest cryptocurrency exchanges is being closely watched, as it could indicate a strategic shift or a specific market sentiment among institutional investors or large-scale holders. Understanding the implications of such transfers is key to interpreting the broader market dynamics and anticipating potential price movements. The sheer volume of Bitcoin involved suggests that this is not a routine transaction, but rather a deliberate action by a substantial entity. The transfer from Coinbase, a platform known for its institutional services and high-net-worth clients, points towards a potentially sophisticated actor. While the exact identity of the sender or receiver remains unknown, as is typical with blockchain transactions, the destination of these funds often offers clues. If the Bitcoin was moved to a private wallet, it could signify a move towards long-term holding, often referred to as hodling, indicating a bullish outlook. Conversely, if the funds were moved to a different exchange or a known over-the-counter (OTC) trading desk, it might suggest preparation for a sale or a rebalancing of assets. The timing of such transfers, especially when correlated with market news or price action, can provide valuable context for traders and analysts seeking to understand the underlying forces at play. This particular transfer occurred amidst a period of heightened market volatility and significant institutional interest in Bitcoin. As institutions increasingly explore and adopt Bitcoin as a store of value and an investment asset, their movements on the blockchain become crucial indicators. The ability to track these large transactions provides a unique window into the strategies of major market participants, offering a level of transparency that is rare in traditional financial markets. The 2,300 BTC represents a substantial amount, roughly equivalent to tens of millions of dollars depending on the prevailing market price, making its movement a noteworthy event. Analysts are dissecting the transaction to discern any patterns or intentions. Some speculate that this could be a strategic move by a large investment fund to consolidate its holdings in a more secure, self-custodied wallet, moving away from exchange-held assets for security and control. Others suggest it might be part of a larger accumulation strategy, with the entity acquiring more Bitcoin over time and consolidating it. The fact that it originated from Coinbase also raises questions about whether it's related to institutional client activity or the exchange's own treasury management. The implications are far-reaching, as large-scale movements like this can sometimes precede significant market shifts or indicate a change in sentiment among influential holders. The broader market reaction will likely depend on the subsequent actions of the wallet receiving these funds. If the Bitcoin remains dormant or is systematically moved into staking or DeFi protocols, it would reinforce a long-term bullish sentiment. If it begins to be distributed across multiple exchanges, it could signal an impending sell-off. The transparency of the blockchain allows for this continuous monitoring, providing valuable, albeit often speculative, insights into the strategies of those with the most capital. And that's a wrap on today's top stories. We'll give you a lightning round recap in just a moment. Stick around. That was a whirlwind of action. Bitcoin is increasingly seen as a store of value, possibly even surpassing real estate for institutions. A major lawsuit against Strategy Inc. was dismissed, shedding light on crypto accounting transparency. Meanwhile, BlockDAG's presale is exploding, raising hundreds of millions and attracting major investors. Finally, a massive 2,300 BTC transfer from Coinbase is giving us clues about institutional strategy. If you found this update valuable, give us a huge thumbs up, subscribe to Bitcoin Bulletin for all your crypto news, and hit that notification bell so you're always in the know. Don't forget to follow us on all our social channels for more real-time updates and join the conversation in the comments below. We'll see you in the next one.